Hello and welcome to NDTV Profit. You're watching IPO and my guest today is from Ajax Engineering. It's one of the big companies coming into the IPO market in 2025. The IPO opens on Feb 10th and closes on 12th. Price between 599 to 629 rupees per share. It's an offer for sale of nearly 1269 crores. And joining me today is Mr. Krishna Swami Vijay, who is the Executive Chairman of the company, and Shubhabrata Saha, who is the MD and CEO of the company. Gentlemen, thank you very much for joining us today on NDTV Profit. Mr. Vijay, give us a sense of your business, how it has grown over a period of time, and which are the sectors that you cater
to. Thank you. Our journey began in 1992 when I had visited an exhibition in Munich, Bauma, looking for opportunities. The background is that the three founders of Ajax came from a construction equipment background with Larsen and Toubro. I found this equipment called self-loading concrete mixer that seemed just right for the time. India was just opening up, liberalization had taken place, mechanization was just finding its feet, and in concreting it was virtually at a nascent stage. And I was of the belief that self-loading concrete mixer was just the right kind of equipment for India to take its mechanization story forward. And from that humble beginnings, we set up the operations and began to establish the concept around the country, which took a good 10 years. And from that time, it found traction. And from around 2009, it took off until now we have the pride of place in self-loading concrete mixer. Alongside, we also brought in the other products in the concreting space, and we today are a full complement of equipment for the concreting space.
I understand. I was looking at your RHP, and it's a complete circle of products that you provide to the industry. Mr. Saha, your industry is closely linked to three key sectors of the industry, which is infrastructure, construction, and real estate. As we speak, there is 2024 has been a year where all three sectors have been slow, primarily because of the capex spending has been slow. What is your assessment, given the fact that you're directly linked to capex spending?
Yes, Ajit, I must first put up a little bit of a preface to the whole context. Ajax has been a pioneer. It's been a category creator and a dominant player in the self-loading concrete mixer category. But that doesn't mean that Ajax is only a self-loading concrete mixer player. Ajax today has the entire range of all types of concreting equipment that are required for the needs of our customers. Incidentally, it is only one amongst the very, very few global players who have the power of being able to develop, ground up and engineer products and manufacture them truly out of India, and a true make in India kind of a company, make in India, make for the world. So for example, in the paving business, which is a far more complex product, Ajax has been the first and only company that has ground up engineered this product and sold it to outside of India, which includes countries such as Russia, Gabon, etc. In fact, it also takes a pride of place and position of being able to ground up engineer and commercialize 3D printing in this country. So I just thought I'll first call the context of the range of products that Ajax does is almost like a 360 solutions player in the industry. Having said that, from the context of what you asked me about the areas, I think the good news is that despite the fact that it was an election year and monsoons and also certain pivotal elections in the states of Haryana, Maharashtra and so on and so forth, I think Ajax's growth has been quite strong in the first half of the year, and it augurs well for us at the end of this year. I must also say this, that as far as SLCMs are concerned, the range of applications of SLCMs are quite wide, and hence there are pockets of the overall economy that have consistently done well, and we would want to believe that the efforts that the government is putting towards areas such as PMGSY, PMAY, railways, renewable energy, and also the activity that is happening in the private space, which is largely in industrial commercials, also helping us to be able to sell our machines in a manner in which we would love to.
To take it forward, being into the construction industry, or closely linked to EPC players, basically, is there a seasonality to your business, and which is the best quarter that you normally see on a business? From a market's point of view, I'm asking this because there will be seasonalities and there will be ups and downs in your quarterly numbers. So which are the quarters which are going to be a better one from a demand and supply sales point of view, and which are the ones which will be sluggish in some way?
I'll first clarify that as far as SLCM, which is a self-loading concrete mixer business, is concerned, the range of customers range from owner-operators, small and mid-sized contractors, and rental companies. So that's one large segment of customers that we have. Roughly about 30-35% of our customer base as far as SLCMs is concerned is in the area of owner-operator. About 40-45% is between small and mid-sized contractor, and about 20-25% of the customers happen to be in the rental category. As far as all the other products are concerned, which we will use the nomenclature of the non-self-loading concrete mixer product category, we have a range of customers which include small and mid-sized contracting segment. We have the rental companies, we have EPC companies, we also have the cement companies who have their RMC businesses, and also independent RMCs as a broad range of customers. So I think the connection between the two spaces are also very nice to have, given the fact that we have the large swathe of our products. As far as our business is concerned, roughly about 35-40% of the business happens in the first half of the year, about 60-65% of the business happens in the second half of the year. That's the larger context of seasonality that you are referring to.
Okay, and also if you can give us a sense of the kind of margins that normally you work on. For the first half, as we see, the margins around 15.5% EBITDA margins. In FY24, the same margin was 15.65%. So is that the normalized margin for this industry, or there is enough headroom that you have as you make more innovative products to take up the margin higher?
I think a good assumption to make at this point in time would be in the range of about 15-16% EBITDA.
Mr. Vijay, you have been able to venture into the foreign countries. What is the kind of outlook that you have for your company as far as tapping global markets is concerned?
Thank you. The products that we make in India have established the nature of markets that are very amenable to our products, and we have found a similar kind of echo in many of the other locations. As of now, we have 25 dealers operating in 43 countries where our products have already found a route. And as time goes by, this will only grow. So this will be the context from which we start, and of course we will continue to add all our product range into these countries as we go along. We believe that the similar story will play out in many of these emerging markets.
And which would be the...
Sanjit, I'll just add a couple of points. Ajax started doing exports business. Sorry.
Yeah, go ahead.
Sorry, I'm just going to add a few pointers here. Ajax started doing the exports business in 2018, and if you look at the context post-COVID between FY22 and 24, the exports business actually grew at a fairly decent clip of about 26.5%. Though our top line, from the top line standpoint, exports is only 3.5% of our business, but I think we need to contextualize a few things. The domestic industry is also doing quite well. In the future, we anticipate SLCMs growing in the range of about 15 to 18%. The non-SLCM business, 400 to 500 bips higher than the SLCM business. We anticipate that the exports business is likely to grow at a decent CAGR of about 25%, given that the base is low. And also, I think the spare parts business also provides a decent enough opportunity for a 20% kind of a growth. So I think from an overall basis, we are looking at a fairly strong growth across all the segments or the opportunities that we have in our business.
Can you also give us a sense of the kind of capacity that you have as of today? You have a couple of capacities which are already running about 90%, and my understanding is that you are building another one, which is in Adi Narayana Hosahalli. How big is that capacity, and by when do you expect that to come on stream and go commercial?
Yeah. So Sajit, as far as the non-SLCM business is concerned, we have two plants in which the non-SLCM business products are being manufactured, and you're right that we are at the higher end of our capacity spectrum right now. And it is important for a company like ourselves to be able to put up capacities in advance, given the fact that there is this long-term structural advantage that construction will provide us, and the overall infrastructure industry is likely to provide us, and with the government impetus likely to continue strong over the next many years, it's important to kind of craft out that space. As far as Hosahalli is concerned, we are putting together this plant location, which will be of fungible capacity strategically because of the nature and type of products that are likely to be manufactured there. So anything from concrete pumps, boom pumps, pavers, transit mixers, batching plants, etc., will all be accommodated. So from that context, it's a strategically fungible capacity orientation to the structure of the plant. We are putting close to about 50 crores capex in that, close to about 35 odd crores being committed this year, and the balance in the next fiscal. We are hopeful that by the end of the second quarter, we should be ready to start rolling from that plant.
And what is the kind of revenue contribution that will come in from that plant as and when that goes commercial on an annualized basis?
No, as I indicated to you, sure. So as I indicated to you, the non-SLCM portfolio, we are doing reasonably well. We anticipate that Ajax's product, as more and more installations happen on the ground, it will have a virtuous effect. It will have some kind of a network effect with more and more customers preferring to buy Ajax's product on account of its product quality, its reliability, its productivity, service uptime and support, and also the fact that we are strengthening our B2B space by way of being able to sell to larger clients, apart from the fact that we have a wide network of dealers. In fact, Ajax has the largest dealer network for concreting equipment in the country. We have 51 dealers, 23 states of coverage, 114 touch points. So both the areas of the business, which is B2B2C and the B2B, will contribute to enable the non-SLCM business to grow at least at about 400 to 500 bips higher than the SLCM growth. And this, I think, augurs well for us.
The non-SLCM business will also have a higher margin profile compared to the SLCM business?
See, we don't distinguish the margins. We report margins on an overall basis. We don't do any segmental reporting.
No, I get that. Why I'm asking is that is there a margin kicker which is there as your product profile moves away and brings in more diversified products into the revenue stream?
No, I think it's important to recognize the fact that in this category, our base is small. As the scale kicks in, we obviously would like to leverage the benefits of supply chain efficiencies, which will hopefully add to the opportunity in time to come, including some of the opportunities which are slated in things like pavers, and hopefully with exports as a contribution as it improves. I think some of these things will start playing out.
Give me a sense of, if you can.
In fact, in the case of the non-SLCM portfolio, we have mid to high teen margins from a gross margin perspective.
Okay. Give me a sense of the cash flow positions as well, because I was looking at your last cash flow from operations. It's negative because you've been investing in as a whole. Do you expect to go into cash flow positive from an operations point of view going forward?
I think so there is some contextual misunderstanding. I think Ajax's business model predicates a very strong EBITDA to cash flow ratio. And if you look at our cash position at the end of FY24, it's at about close to 700 odd crores and close to about 400 crores being added over the previous 2-year period. So I think there is some kind of a mismatch, it seems to me, on the context of the cash flow position. We anticipate that given the fact that there is an emission norm transition that has happened, we of course have built up some kind of inventory which will get liquidated. So from a cash flow, kind of status, Ajax has been a very strong cash flow player. And if you look at our return metrics also, they're very, very sound and strong. So contextually, I think Ajax is very well placed to be able to capitalize on its business model to be able to churn a lot more cash as we move forward, including this whole transition that is taking place.
Mr. Vijay, on the innovation...
In fact, though we have... Yeah, sorry, go ahead.
I'm saying, Mr. Vijay, on an innovation front, do you also plan to move from, diesel vehicles to electric vehicles as you go towards more, greener, vehicles? And is that one of the timelines that you have, because most of the construction industry and mining industry is gradually looking to move towards electrification of vehicles. So are you also looking at that?
Sajid, as a company, we have always prided ourselves as being very strong on engineering and innovation. We have continuously been, involving ourselves in new product innovation and development. For instance, like we mentioned, the self-loading the slip-form paver was the first. We were the first to manufacture in India. It is amongst the most complex products, and there are only few very major players in the world. We are the only one in India to have made this product from ground up. We are also made a very large format 3D concrete printer, and that has in fact been now put to use in 2-3 marquee projects by Larsen & Toubro, one of them amongst the largest 3D printed campus in the world. So as a natural sequence of growth from this, we are definitely looking at opportunities for development of our self-loading into newer technology areas like electric and hybrid. And they are all on the drawing board, and we will come back to you when the time is right.
Finally, sir, looking at the kind of industry we are in, do you see 2025 to be a good year for CapEx and CapEx related projects coming out on board? How is the order book looking for you?
I would request my colleague Shubho to take that call.
So I think the budget's just been placed, and I think I would imagine that there are 3 parts to it. The first is the continuity in terms of the CapEx investment. If you look at it, the revised estimates from the Government of India are close to about 10.21 lakh crores. That would peg the budget estimate for this year at least about 10%. We would want to believe that execution is the name of the game, and I'm very hopeful that the government will get down to making sure that the execution in the context of putting up infrastructure in the journey of India becoming Vikasit Bharat as part of the Prime Minister's ambition will continue to happen. The second facet, I think it's important to call out the 1.5 lakh crore 50-year loan to the states, the kind of cities that we are looking to kind of build, and various other facets are very important part of the whole growth story. The second part is related to the fact that I think demand stimulation was something that was important. Both of these have a multiplier effect on the economy, and infrastructure is likely to become an important beneficiary right from the grassroots in rural India all the way up to the larger metros and so on and so forth, with all types of infrastructure likely to get constructed. If you look at it, even in the last 120 odd days, the government's impetus towards improving rural connectivity through the PM GSY, and also a very clear indication towards the affordable housing program of PMAY, these have seen good light at the end of the tunnel, and we would want to believe that all of these will perk up. I think the other facet is sustainable energy, on which the government has been putting enormous amount of effort. And we would want to believe that that's likely to continue in a positive direction. Similarly, if you look at railways, another area that the government is expanding, putting capex and infrastructure behind. So I think all in all, infrastructure happens to be a longer term story from India point of view. We would want to believe that we are in the thick and center of it, and it appears to us that 2025 should augur well.
If I may add, Sajit, the mechanization in concrete is still a very under-penetrated area. We have a very low level of mechanization in conversion of cement to concrete. And the headroom for increase of this mechanization is considerable. And that will also kick in as a part of our growth process in the years to come.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on Feb 10th, closes on 12th, price between 599 to 629. It's a OFS of 1269 crores, and that pegs the company with a market value of roughly 7,200 crores at the upper end of the price band. Thank you very much for joining us today on NDTV Profit.